Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, February 23rd, 2026. It is 10:23 a.m. Eastern Time as I'm starting the video, and here's what we're going to do. I just wanted to get one out early, highlight some of the things I'm watching this week, and where some opportunities might lie. I'm going to start out here, as I often do with the equity markets. This is QQQ. QQQ remains within that trading range. Unless you're brand new to the site or just catching up, continue to favor a downside break, and suspect that if and when that happens, it will probably be a pretty swift move down. We will most likely undercut the 200-day moving averages, which is a very precise call. Most people expect, and it's usually the case when you get far away from the 200s, as I've covered many times in the past, the market will come back and periodically visit the 200s in a bull trend, and that's where you want to step in and buy. It's about as close to a guaranteed thing as you can get in the markets, just like back tests of the 200s from below in a bear trend provide rejections, and then once you recover the 200s, that's bullish, and then you back test, you buy the back test. It's a very simple MO. However, I'm calling for most likely or favoring a different scenario, and that would be that when the trading range goes, because such a key level and we've been in there for a while, energy building like a coiled spring, I like to say, it probably shoot you down through there and take you to the next target, T2. Remember, this is a longer term, a swing trade that quickly hit when we had a couple short entries here on breakdowns and backtests. We quickly hit the first target, and then from there it's just gone completely sideways now for months. And so that's still the second target on the swing time, swing trading time frame. Swing trades usually measured in weeks or months. This one's obviously a few months now. And I've also had on the 60-minute chart, a lot of ins and outs and entries there. And then on the weekly chart, I still maintain these longer term targets. So, and you can see it there. There's the support. There's the trading range, and there's the 200. So, if you're a longer term swing and trend trader, and you see things the way I do, and you want to position and not try to game all those little squiggles and counter trend bounces and risk getting out, because that's sometimes what happens. If you try to game a bounce and you reverse or get out of your positions, you can go right through a support level. And then, like I said, I very much suspect, favor that not only these levels going to break, but when they do, it'll probably be a very fast and swift and powerful sell-off that pretty much is going to deny any what I call JCL shorts, Johnny Come Lately shorts, and entry. So, if that happens in that fashion, again, that's a very precise type call. It's one thing to call where markets are going to go. It's another to call how they're going to get there. If it happens and we do this, that's, obviously you wouldn't want to be shorting right there because that's the first target where a bounce is likely, second target there on the weekly, and so forth and so on. So, as always, we'll see. And, if things go the other way, they go the other way. And then we'll be talking about, if a QQQ wants to break out of this trading range. My thoughts. Any new high will still be a marginal new and divergent high, one that I would put very good odds on failing. So I wouldn't chase a breakout. But if you are bullish and want upside targets, I really can't give you any. You can use Fibonacci projections, but there are no resistance levels to provide a target. A lot of my price targets are based off support and resistance levels. Okay, let's move on. It's not gonna be a long video. I want to cover a few more things. So on the broad market, the S&P 500, I do expect a pullback to the 200s with the first bounce. It should roughly coincide. Remember, the S&P 500 has been stronger due to the financials, which I'm about to get to. We have a midpoint line at about 673.80, which should roughly coincide with a breakdown of the bottom of the support range on QQQ I just showed you. So I suspect we'll break that. The S&P will fall to or around the 200-day moving averages around the same time QQQ hits that second price target on the daily, and that's where you'll get the first buyer stepping in. So that's at least how I plan to trade it. And then IWM, the small caps, I've given you targets recently on both the daily chart here. These are typical swing targets for a typical swing trader. We had a wedge breakdown right here. We quickly hit the first target, and we've been bouncing on it. So the small caps, IWM has gone into a similar but a much smaller trading range. You see, it's only since the really since the first of the year in January right here. Nonetheless, it's that T1 level. It's also, was price support it's at 258. I'd say right here it says 257.99. And remember, we hit it, we bounced as expected. And so that validates it as a valid support level. And so therefore, once it breaks, it should take us down to my next target or targets. You also have that first target. You can see we overshot the price level by just a hair, and you hit that 50-day moving average, the yellow line right here. That's your 50 EMA right here, 50 EMA. And that acts as support during a bull trend in the shorter term. It's a shorter, faster moving average. And traders will buy pullbacks, and once it's taken out, they'll sell it. There was a couple weeks of selling there, down or moved down below it. It recovered. And so it's going to be a break of dual support, which is even better. The only thing that I like better than shorting a stock that breaks a support level is when I short a stock that breaks 2 or even 3 support levels at once or in close proximity. And again, I also gave it to you on the 60-minute chart. There's where we shorted it. Our entry was on January 16th right here. Made it ever so slightly marginal divergent and divergent high, negative divergence right here. Hit my first target, bounced as expected. Hit my second target, bounced as expected. And now we need to take those levels out, which I expect, and go down to these targets here. Again, if you're trading, this is the 60-minute chart. On that, that's these smallies. I continue to maintain that the VIX is, it was cheap when we started, when I started talking about it. It's still relatively cheap. Let me pull that up. Sorry, give me 1 second. You want to buy the VIX down around the bottom of its trading range. You want to be a buyer, as we have been for the last couple of years, so the VIX around these levels, and you want to be a seller when it gets up to the higher end of the range. And the VIX, as I've mentioned, very constructive from a technical pattern. Basically looks like the stock market in reverse, where I have negative divergences in the stock market, overbought conditions there. We have positive or aka bullish divergences, and the VIX just continues to march up. I've highlighted pullbacks to this trend line recently as objective long entries or re-entries. And then this is the magic number it needs to go right now, about 23.19, those recent highs. And as I said last week, I believe a break down below the midpoint range on SPY I just showed you in the bottom of my QQQ trading range will coincide roughly with a breakout here and should shoot the VIX up fast. I mean, that's the nature of the VIX. That would be to that 2662 target, about a 23% pop, 60 and 153 up there. I continue to maintain and believe that this market is grossly underpricing risk. I mean, let's forget about, the fact that we may, go in and attack Iran any minute now. For those of you following the headlines, it's a mess in Puerto Vallarta. They just killed a major cartel head. There's a lot of violence there, people running from the airport, cops being shot in the street. If you look on social media, just cars being burnt, and a lot of tourists are at risk. U.S. has advised all tourists stay in place. I even have it's my brother-in-law's son-in-law is actually there now. He went over for a bachelor party and he's trapped there. So I really hope nothing happens to anyone else. There's already been quite a few deaths and some violence there. Hopefully U.S. tourists and the locals are safe going forward. Hopefully that gets, but if it doesn't, I'm going to highlight some trade ideas for you here in addition to these indexes. Carnival. We've been short Carnival for what seems like ever and a day. We already hit the first target. We go here to trade ideas. What's that? Active short. CCL. Let's make this a little bigger for you. Carnival. And, I haven't logged in today yet. Okay, so then we hit the first target on January 28th. That would have been No, what's happening there? Oh, okay. That was covered in a video. That's why I tagged it. That's why it's in there. Um, but here, let me get back to the live chart. Live chart, we hit the first target right here, first top of the first target zone in back in December. The stock went on to put a marginal new, meaning slightly and still divergent high end recently. And the only thing that's changed since my last update, I have a nice clean uptrend line here. So this line here and this is your most recent divergent. Price is making a higher high. That's negative, aka bearish divergence. And now you have a nice clean uptrend line, well defined, coming off the April lows. Lots of reactions. 200-day moving averages just below it. And so break of that, remember, T1's already been checked. So I added in that January 28th video a 6 target. Let's just for kicks and giggles assume that gets hit. You're talking about 63% downside. Even if my next target T2 is hit, that's still about almost 30% downside. Why I started with Carnival here? Well, first of all, I like, still very much like this trade. Taking a little longer to, well, I mean, again, it's, has it played out? Yeah. If you, took profits on the first target, if you reversed it, or, book profits waiting to re-enter on a bounce back. Again, this would be your next objective short entry add-on. And, it's also going to be about where I guess we initially shorted on one of these breakdowns here. But why I wanted to highlight it with that violence, there's no positive way to spin what's going on in Mexico right now for Carnival. In fact, I already knew this, but just to verify it, I did a quick Google AI search. What cruise lines have the most destinations and trips to Mexico? Carnival and Royal Caribbean pop up. Carnival Cruise Lines, widely cited for having the most frequent year-round schedule of short escapes to Mexico. And again, who doesn't love Mexico if you've been there before? I've been several times. I've been, all over from Baja Peninsula, Cabo and the Yucatan Peninsula and all that. And those places in the past that I went were always considered safe. They were off limits. The cartel kind of had an unspoken agreement with the Mexican government. Stay out of, leave the tourist spots alone because that's where, a lot of gravy is. It's a big, huge industry in Mexico. So Cabo and Playa del Carmen and Cancun and Cozumel and even Puerto Vallarta, which right now is under siege almost, and tourists are have a shelter in place. The roads are blocked. If they can get out, great. The airport's a mess. So my point being, there again, even let's just say that nothing happens, that no U.S. tourists are harmed. That's still going to make people second guess booking a Carnival cruise, especially to Mexico, right? And you're also getting similar travel warnings. I don't know if you follow this stuff, and just a lot of the Caribbean islands too. Violence has really ramped up and over last year, and U.S. Travel advisories in a lot of those countries. So that's that. But again, I don't trade off the news. It's just a fundamental catalyst that's probably going to help accelerate or kick the next leg down. And bottom line is support is support until less broken. So replicate that trend line again. Use log scaling, very important. Come off the April lows, and that's your next sell signal or objective entry add-on for Carnival. Maybe another reaction off T1 zone again, but again, a lot of meat left on that bone. The other sector, one of the sectors I really like, and I've been harping on to really, it's the one holdout for the stock market is the financials. And again, I'm just going to recap this for those new to the site or new to my analysis. So the outperformance, the reason the S&P 500 is at the upper half of its multi-month trading range with QQQ at the bottom half is because of, in very large part, the outperformance of the financials. It was this they held up when tech started correcting and then went to new highs here, and that lifted the S&P because they have a big weighting. It's the second largest sector in the S&P with virtually no representation in the NASDAQ 100. So I said the market will not go anywhere down much. Even the NASDAQ itself, even though the financials don't impact it, it's only going to go so far without the financials breaking down. So we had nothing but check marks in the last few months or months. breakdown, backtest, rejection, followed by a failure of the breakout. This was all-time highs before, so that breakout to all-time highs failed there. That was the next check mark. Then I had a bear flag pattern. You can see it in there. Highlighted. That broke down, played out to the, and that took us down to this 53.10 support where we bounced. Went back up, got rejected off that 54.50-ish resistance. Break of the 53.10, that was my next check mark, and the 200-day moving averages, both the simple and exponential in one fell swoop. Big time check mark for me. That's a level that on many indexes and sectors and key stocks, they come in and buy in a bull trend, and once they're taken out, then a bear trend is underway, and it doesn't look like much, but from when the 200s went, well, you gap down below them. That was a 12% drop there. And again, you can go back in history and look at the, how any index or the financials fared once they lost their 200. So they lost them, hit my key 51 support, bounced, rejected as covered last week. And right now we're currently testing it again. In fact, as I speak, we're at 51 right now. Again, looking for a break of that, which will take the most likely take the S&P to the bottom of its trading ranges in the 200-day moving averages and take QQQ down below the trading range and explode the VIX. Now, as I like to say, and you hear me say it often, support is support until less broken. So right now, there's only one trade in the financials, and one trade, and that's to buy it. I'm waiting for this to break, but just in other words, this could be an intraday, it's again, we're right there right now. We're at 51.04. So what you want to see, whether it's today, tomorrow, or 6 months from now, a solid move down there, especially a big intraday drop, and even better to see a solid daily close below it. So that's kind of your update on the financials. There's a lot of subsectors in the financials I like. One of those I've been harping on for months now, the broker dealers. That one already broke down from that beautiful bearish rising wedge pattern. Let me just draw it out for you. It comes off the April lows right here, right there. Sell signal 1. I've highlighted a lot of these with Robinhood being my favorite of the sector, but there's others. I just had a price alert today. I'll show you a second on Interactive Brokers. Broke down multiple sell signals. And then, as just covered last week, we took out the 200s, back tested them for a few days, and a nice rejection candle today. All that needs to do now is take out, I'm going to set a price alert, take out the recent lows. That should most likely seal the deal. But keep in mind, this right here, see this purple box, that was a multi-month trading range. That was the breakout of it, followed by a failure. As I often say, fewer things in investing or trading are more bearish than a failed breakout. That was a breakout to all-time highs. That breakout failed, and as was usually the case, you go back down. It's a very bearish event, and so that's it. I had a price alert today. I've had quite a few go off. One of them, Interactive Brokers. Beautiful looking setup. It's actually already a trade idea. We already hit our first target right here. I moved this over, so I would have gave that to you back on October 17th. So where was that? About right there. So that was our short entry on Interactive Brokers there. Hit my first target, gave me an opportunity to cover, book profits, and or reverse for a bounce. Also the 200-day moving averages right below it, so bounce was likely. We did bounce. It was a marginal and still divergent high. And now, again, I want to highlight it as a very nice looking trade setup. Uptrend line right there. There's your divergence line, i.e. negative divergence. It's a big wedge pattern, bearish rising wedge. A break there should take you down to, first reaction is probably going to be here about 64.28. But again, I've elevated there's an elevated crash risk or risk for big move down. So it wouldn't surprise me in the least to see a lot of these initial early support levels, including and not limited in some cases the 200 days, to get sliced through. Remember, we already hit T1. Doesn't mean we can't hit it again and bounce again. It just increases the odds that since it's already been checked right here, that we can go on down through it. And these are still the second and third targets. And these are still the potential fourth and fifth, which I'll make a decision whether or not to make those official targets, depending on what I see in the coming days to weeks here. Just to measure it out for you, that's about 73 price support plus the trend line. To hit my third target, that's going to be about a 31% drop or profit on Interactive Brokers. So I wanted to highlight that as a nice looking short trade. I can go sit here and talk all day long. Capital markets, a business development group. These are my financials. Remember BDC, the business development companies, those private credit, testing that key major reaction low. They continue to diverge. We've traded this thing played it like a grand piano. But if this breaks down, look at private equity too, it's just going to be bad for the market. Private equity keeps making a divergent low, but it's about to burn through. And that's what I want to see to help firm up the bearish case. In other words, if you go much lower, you've now taken out the previous reaction lows and you no longer have negative divergence. And remember, private equity, a lot of the same companies have their hand in the same cookie jar as private credit. And so, and again, it all, like I said, the financials have been that one last holdout or last shoe to drop I've been waiting for. And so I think that's likely to happen and happen soon. There's brokers. I'm just clicking through my financials related watch list. You can see the sectors. II broker dealer. Remember, Robinhood was my top pick in that sector from back here. Already dropped 50%, coming up on that 67.27 target. I think I have targets for you. Do I on the weekly? Yeah. It's nice support it's coming up on, but probably going to go on down through there if the rest of the sector breaks down. Let's see if I have anything else for you. I believe I already covered the VIX. Yeah, I did. I already covered the VIX, right? VIX looks good. Oh yeah, and the regional banks, KRE. Oh gosh, since this morning, it's just triggered. This is, call it an official trade idea. I've been highlighting this one, waiting for this wedge to break. I have to give you targets. I'll get them out to you guys. I'm in no rush because I'm looking for a pretty good size move here. So that's an official, an objective short entry now. We have some individual regionals already as active short trades. In fact, this one here is one of them, PFBC. I got out to you recently on the back test right here. It's a beautiful setup. I still very much like it. This is Preferred Bank Los Angeles. You have a nice clean uptrend line, which was recently broken, back tested. I think that's where I added it for you on the back test, and the 200-day moving averages to boot. And so if the sector breaks down, it's a birds of a feather situation, guys. Birds of a feather flock together. You take your pick. You can use KRE or just short the regionals individually. PNC breaking down there, Fifth Third. These are all, a lot of these are former employers when I was a stockbroker back for their bank brokerage programs. I worked for Huntington, Fifth Third, Regions, HBAN, RF. Look at my old haunts. Yeah, they're all looking good to the downside, that is. I don't know what happened to these trend lines here, but so that's it. Let me get the video out to you guys. And again, I may be wrong. Watch those support levels, but the takeaway that I would like to just impress is that if my analysis is correct, things can happen and will likely happen very, very fast. So if those levels break, again, I look at it collectively. I look at the Mag 8. I look at NASDAQ. I look at the S&P 500. I look at mid, small caps. I look at the key sectors, financials, et cetera, et cetera, et cetera. And I've gotten quite a few check marks over the past couple weeks, even months. And again, the financials are about to trigger as well. And it just adds to the case that once all that happens, and the way I see it, it is technical analysis, how the charts work, but then it becomes obvious to those that it wasn't obvious to, things that I've been looking at for months now. In my mind's eye, I could see it getting to those levels. And I think when all those levels start to break, again, it's both man and machine alike. By that is, individual traders, both professional, retail traders, hedge fund managers, pension fund managers. They see key indexes sectors lose the moving averages, stops get hit, longs will exit those positions, short sellers will step in. And then it's also the algos and program trading that we'll see certain sectors lose support and keep moving averages, and then the sell programs hit. And all right, that's it. So, or not, again, like I say, support until unless broken. So, a lot of support levels have been broken recently. There's still others that haven't yet. So watch it all collectively. If anything changes in my outlook or thoughts, I'll let you know. But let's wrap it here. We're at the 25-minute mark. Let me get the video out to you. And if I see anything else that stands out, I'll follow up either with a new post or in the comments section below this one. This has been Randy Finney with Right Side of the Chart. Have a great day.